Geopolitical tensions just sent oil past $90 and the VIX spiking. Markets are swinging wildly, and I just maxed out my margin and started pouring more money into my income portfolio. The last 2 weeks have been some of the most volatile we've seen all year. Oil is surging, global markets are all over the place, and many investors don't know what to do. Meanwhile, my income portfolio just crossed $200 a month in projected gross dividends. That's up from $176 2 weeks ago. Today I'm showing you exactly how I got there, the aggressive moves I made this week, and why this kind of volatility is actually fuel for the Margin Snowball. Geopolitical events overseas sent shockwaves to the market this week. Oil surged past $90 a barrel, the VIX spiked, global markets sold off hard. Here in the US it was a roller coaster. Monday and Tuesday we opened deep red and recovered. Wednesday we bounced on hopes of a resolution. But Thursday and Friday the sellers took over. The S&P closed the week down over 2%. This is real volatility, and volatility is exactly where the Margin Snowball thrives. Let me show you why. Here's what a lot of people don't understand about covered call ETFs like SPYI and QQQI. They generate income from option premiums, and when volatility spikes, when the VIX jumps and the markets are swinging, those premiums go up. More expensive options means higher premiums collected by the fund. Higher premiums means bigger distributions to me. While growth investors are stressed about whether their tech stocks will recover, my income portfolio is projecting its highest payout yet. Volatility isn't my enemy, it's my fuel. Let me show you the numbers. My income portfolio is now sitting at around 20k. My main portfolio is at about 32k. Combined we are at roughly 52k. Now 2 weeks ago in my last video we were at 50k. So even with all the market volatility this week, the portfolio is still growing. But here's what matters more than the portfolio value. My income didn't go down. The dividend projections actually went up. The big milestone, my projected gross monthly income just crossed $200. 2 weeks ago this number was $176. We jumped 14% in 2 weeks. Now I didn't just sit back and wait for that to happen. Let me show you what I did this week to accelerate it. This week I made 2 big moves. First, I maxed out the borrowing power on my main portfolio. I'm now sitting at $9,500 borrowed at 30% LTV. That's right at my personal ceiling. Every dollar of that went straight into the income portfolio to buy more shares of SPYI and QQQI. Second, because I've been depositing so aggressively into income, the LTV on my income portfolio has actually dropped to about 23%. That means I have room to borrow against income again. So I'm starting to ramp that back up toward 30%. Now borrowing more during this kind of uncertainty sounds crazy. But here's the math. My maintenance requirement on every ETF I hold is only 25% equity. At 30% LTV, the market would have to drop over 60% before I'd get a margin call. The 2008 financial crisis was a 57% drop. I have a massive cushion. On top of the margin, I'm also restarting my ramp-up plan. I'm putting $100 a day, $500 a week from my savings directly into the income portfolio. This is on top of my regular $100 to main and $200 to income weekly deposits. Why now? Because this is the kind of market where I want to be buying. Volatility is elevated, which means the covered call premiums are juicy. Every share I buy right now is generating more income per dollar than it would in a call market. Between the extra deposits, the maxed out margin from main, and the new borrowing against income, I'm force feeding the engine as fast as I possibly can. Let's zoom out. 2 weeks ago I was at $176 gross, netting about $136 after the margin bill. Today we've crossed $200 gross, which pushes my net cash flow even higher, completely covering the 4% margin cost with room to spare. The snowball is paying for its own debt and then some. History backs this up. Markets recover from geopolitical shocks. Volatility creates short-term fear, but it rarely derails the economy long-term. The S&P 500 has been higher the majority of the time 12 months after major geopolitical events. The next milestone is $500 a month. At my current acceleration rate, the extra deposits, the margin deployment, the reinvested dividends, I'm going to get there a lot faster than my original timeline projected. My job right now is simple. Keep buying, keep collecting, let the snowball roll. If you're building an income portfolio or thinking about starting one, this is the kind of market where foundations are built, not when everything is green and at all-time highs. Subscribe if you want to follow along as I build this life. We just passed 146 members. See you next week.